and welcome to India Market Open. Asian markets are rebounding, guys, this morning. So after a bout of profit-taking yesterday, we seem to be back in the green this morning.
It's been a good day. It's been a good day overnight. All of Asia is looking poised for a trend up and a good opening for us as well. Good morning, Niraj. Good morning, Samina.
Yeah.
Let's take a look at what markets were doing overnight, and it was good. Big pop on Wall Street. The Nasdaq was up almost 2% overnight, and that fear of what's happening with IT counters seems to be receding. A couple of things contributing to it. The 10-year yield, definitely one of them. So all eyes, of course, on CPI and PPI data. That's the Producers Price Index and the Consumer Price Index, which is going to come out later this week, end of the week in the U.S. But the U.S. 10-year, look at that, very close to the 4% crucial mark, with those fears of what's happening to interest rates sort of easing, and that's the important bit. Contributing factors probably crude, which plunged overnight nearly 4%. What has happened here is that the Saudis have cut crude prices, cut Arab oil prices by 2% because they're now competing in a market which is dominated by the buyers rather than the sellers. And we saw that happening. Some recovery perhaps in the NYMEX, but overall that's setting the stage for benign crude prices so through and through, and that's going to be an important factor to look at. Asia also looking up in the green, and we can pull up Asia and just see what's happening there. Look at that fabulous opening in Asia, and hopefully that will flow into the Indian mood as well. Quickly just take you through what kind of fund flows we saw overnight before I hand it to Niraj for the trade setup. FPIs bought finally yesterday, small amounts, about 16 crores, while DIs bought 156 crores. So looking positive after quite a drubbing at close yesterday, Niraj.
Yeah, and the Bank Nifty, the principal culprit, you have to argue, because that dipped quite a bit and closed below some key levels as well. So an eye out will be on the Bank Nifty and how much it can recoup, because this 47,500 is the level from which most technical participants say it usually bounces back. But if you look at the options data from the Nifty perspective as well, yesterday in particular, while 21,700 is the area of maximum call OI, the maximum addition in trade yesterday happened at 21,600. So this is the Bank Nifty level, but maximum addition, maximum writing happened at 21,600. Now what happens if we cover this level and stay convincingly above that level? Because that is when it sets the cat amongst the pigeons, because this market has this tendency of being bought on every dip, right? We've seen that happen almost every single large dip. And therefore, if that gets covered, then you might see a bout of short covering at 21,600, possibly at 21,700 as well, but predominantly at 600, because that's the latest round of writing that has happened. A bunch of high-flying non-Nifty names saw a bit of corrective moves yesterday, and we'll talk about them later in the show, but I think that is something to keep a keen eye out for. Since we're talking of levels, just one key quote that I want to mention before I talk about the sectors that stood out. C.K. Narayan, in his weekend column, laid out this level as well. I just want to bring it out. He mentioned that watch out for a close below 21217 in the week ahead. If that happens, then the reversal pattern which the market typically exhibits would get erased, and if it does not and the prices move up, then the RSI signal itself will set up a new high target of 22270. So this week on the downside, 21217 are essentially those levels as per Dr. Narayan, and if we have a move today and tomorrow, then it opens up some upside, so keep that in mind. Lastly, from pockets that stood out yesterday, two small pockets which don't usually get spoken about as much, but the mid-sized Reliance Group companies, or the small-sized Reliance Group companies, they're not small really, about $1 billion, but Network 18, TV 18, Den Networks, all of them had a really strong price volume action yesterday. And textile stocks, everything from an Alok to what have you, the clutch of textile names out there, which had a really good setting yesterday. Century Textiles was up as well, though it's also a real estate play. But I think that was the lay of the land yesterday, that a clutch of these two pockets really stood out in trade yesterday.
Indeed. So that, of course, was what happened on trade yesterday. Niraj, one thing I think may be a little disconcerting is that the VIX has jumped substantially yesterday. And also what we've seen is while the markets are respecting and making higher tops, they're also making lower lows. So while there is resistance on the top, very clearly there is some level of discomfort at higher levels. At least the bulls are feeling it. Global or local cues, we can argue that. But lots of triggers in today's date of trade. The handover from Wall Street and Asia is very solid this morning. And crude declining 4% is only aiding to the optimism for emerging markets like India. The GIFT Nifty indicating an implied start of a 120-point gap up. 21,800, remember, on the upside is a level where bulls are seemingly finding resistance. Lots of news flow as well, so lots of stock-specific triggers that we will be watching out for. The big one this morning, of course, is going to be what we will see with Bajaj Auto. This has been in the offing for the last few days, and we've talked about it too. Bajaj Auto's board, which met yesterday, finally approved a 4,000 crore share buyback. The company will repurchase 40 lakh shares. Promoters of the company will be also participating in this buyback. Remember, promoters hold about 54.94% stake in the company. What is interesting about this buyback is that the acceptance ratio for this one is actually much lower than the ones we've seen last time around, which is July 2022. We'll talk to, of course, an analyst and understand why that's happening. It comes at a pretty solid premium from yesterday's close. So the stock closed at 6,983, which is an almost 40% premium to yesterday's close. The buyback price per piece is at 10,000 crores, in 10,000 rupees. So it'd be interesting to see how Bajaj reacts. Good price of buyback, but of course a lower acceptance ratio. The stock has been on a tear recently, and more importantly now becomes the third largest auto company by market cap, overtaking Eicher. So that is the story of Bajaj Auto in a nutshell. This of course came in right after markets closed yesterday. Reports have claimed that Sony may call off the $10 billion merger with Z. Well, it'd be interesting to see how things play out. The merger is been in the works 2 years and counting. This could be another hurdle, or could be the hurdle that could lead to a call-off between the two parties. On editor's cuts, Azeez will throw some more light on interpreting what both companies have said and what this really means, and diving deep into what those comments could mean for Z Entertainment and stakeholders, shareholders given of Z Entertainment. Well, I want to pick up two sectors that will be in focus. So we'll talk about stocks. Of course, Tamanna and Niraj will talk about them a little bit more. But in terms of counters to watch, OMCs and paint companies, keep an eye out on those. OMCs will be in focus because crude has declined 4%. You had two brokerage upgrades coming from JP Morgan yesterday and from Jefferies as well. HPCL, BPCL with a few green spots in a market that was generally down in trade yesterday. Both those counters will once again be in focus. You'll also see the likes of an ONGC in All India being on the sell side on back of high crude prices. Along with that, paint companies could also be one space to watch out for. Relatively smaller. They've also been the ancillary play for real estate, but on back of lower crude prices means lower raw material cost and better margins for paint companies. Niraj, Tamanna.
Yeah, I just want to add one bit on the crude prices and just some perspective on what it means for India, which is a crude importing nation. When I said it's become a buyer's market, right now you have Russia, US and your OPEC nations all competing for big buyers, and India is definitely one of them. So it's a good place to be and a space to definitely watch out for with what's happening. US becoming the largest crude producer outside OPEC has changed the game. India upping its buy from Russia has changed the game. So that's one. But of course, other counters which may have some action. I want to talk about gaming stocks just for a bit. The Supreme Court is finally going to start a hearing on a clutch of petitions which is challenging GST notification in August last year and government rules that are applying a 28% tax on gaming retrospectively. So you have to watch out for a Nazara, a Delta. Delta also has its Q3 numbers today. But just to take a second to explain what that means. This had hammered down these companies completely because some of the GST notices they received were larger than their entire market cap and their revenues multifold. It's as simple as this, that the government wants to tax not only what you pay when you buy a set of chips or anything that you bet on or you gamble on or your initial purchase, but every transaction in between will also be taxed at 28%. The companies are going to be arguing in court that that's just not feasible. You can tax whatever has been won, and that too not retrospectively. So that's going to be interesting to watch out for. And those are a couple of counters that I'd put on the watch list. You want to go?
Now, just the thing with Nazara is that about 6-7% of the total revenue from real money gaming. So not as badly impacted as Delta Corp. Relatively, relatively. It definitely gets impacted, but not as badly as Delta. Because only 6% of revenues come from real money gaming.
But, you know, Niraj, this is, of course, we look at it from stocks perspective over here, but this order is important in terms
from an industry perspective.
Whether this industry, which flourished massively, is going to sustain or perish.
Yes, most certainly.
It's a do or die.
Most certainly.
So in that sense, it's a big one. But yes, Niraj's point is well taken, that Delta has a bigger, and we'll see what comes up in the numbers today. We'll be keeping an eye on that. BML, another one. You know, the others on my list, at least a couple of them are PSUs. They continue to be very well received by the market, and BEML, one of them. 329 crore order from the Ministry of Defence. They will be supplying mechanical minefield marking equipment. That stock was up yesterday in trade, even on a dismal day. LIC would be another one. So they're entering into this residential mortgage-backed securities business. May not be very positive for the counter, but we'll have to wait and see. It's a company backed by the National Housing Bank for residential securities. And LIC will be a 10% share in this. Fino Payments Bank, another one, and this could definitely be a positive. They have applied for a small finance bank license to the RBI, and that's one that is on my radar. What's on your list, Niraj?
You know, amongst other things, just before we get to stocks, there's this thing that has come out that we know that JP Morgan included India bonds in its index. Now, Bloomberg is proposing a 10% weight for the India bonds and the emerging market bond index as well. Now, one was anticipating this to happen sometime after June, once the JPM thing starts, but this has happened earlier. So from a bonds perspective, that's great news. But, okay, since we are sticking to stocks, and we'll talk about this news, by the way, later on in the course of the show, but since we're talking about stocks, I think the Adani Group companies, and the reason I bring this up is because there's yet another show of strength from the group about the financial positioning, if you will, because they have signed an MOU to invest about 42,000 crores in Tamil Nadu. Now, agreed, these are MOUs, but it's interesting to note, so watch out for that one. Watch out for Tata Motors. The JLR Q3 numbers, essentially strong momentum continues. Remember, Tata Motors was the best performing, or arguably the best performing Nifty stock, at least in 2023. Wholesales were up 27% YOY for the Q3, and for YTD as well is about 28%. So the momentum effectively continues. Order book, in fact, got lower. To my mind, this reflects increased order fulfillment to clients, and we'll get a guest to talk about this as well in moments from now and try and understand what's the view of our guest on even Tata Motors. So that is interesting. Remember, the company guided to better wholesales in H2 over H1. The only thing is that there is no update on the free cash flow. Now, at the end of Q2, the company had guided for FCF of about £2 billion for FY24. The H1 FCF was about 750, if I'm not wrong. So maybe the update comes in during the results or otherwise, but that was the only thing that was missing, I thought. So keep an eye out for that. And last but not the least, while there are a clutch of other names, I just saw some interesting trading patterns in a few stocks. GMR Airports Infra, the stock was up 4% yesterday after block deals happened at lower levels. Now, today morning, we've gotten this news about the probably also winning an arbitral award. I don't know if that led to it or no, but yesterday, post the blocks, the stock digested the blocks very well and ended up 4% higher. Very high volumes. Watch out for GMR Airports. Watch out for Paveg. The stock flew after this whole Lakshadweep, Ayodhya tourism piece. 17% up in trade yesterday. Extremely high volumes. Let's wait and watch. On TTM numbers, it looks egregiously expensive. On the guidance given by the management, maybe not so. Let's wait and watch. Be careful, though, with some of these names because they are really moving up. Praveg in the last 1 month has had just a stellar run. And lastly, specialty chemical stocks saw some sharp declines yesterday on very high volumes. Everything from a Aarti to a Naveen to a SRF, everything came off. So be mindful of these.
And especially because specialty chemical stocks haven't even ran up. So this sell-off came out of really nowhere. Another two stocks you want to watch out for is Capside. They've launched a QIP, so that counter could be one in focus. And Metropolis as well. They gave their business update. Numbers were not very convincing. There's been some pressure. While there was a double-digit growth, they haven't managed to pull through quite well. Well, the conversation this morning is all about Bajaj Auto and their buyback. Abhishek, Vice President Sher Khan by BNP Paribas joins us now on the phone line. Morning, Abhishek. Thanks for joining in. Abhishek, initial thoughts? I mean, this has been in the talk for the last 10 odd days about the buyback for Bajaj Auto. The numbers look good, the price looks great, but the acceptance ratio is slightly lower than what the street would have liked.
Yeah, it has been in talk, and that company has already indicated for that it is going to have a meeting on 8th for that. But what is there are 2-3 inferences that we have to catch from in this announcement. Is that one is that it is this buyback is a tender offer route compared to the earlier one was that of to the open market. And if we go back and calculate the earlier open offer, then the earlier open offer came with an amount of rupees 2,500 crore with and a price of up to 4,600, but actually company has acquired around 2.2% of equity with an average price of rupees 3,900. At this time, it is a tender offer route, and the price which they have given is at a 43% premium to the current price. Second is that the earlier open offer or earlier buyback with the open market purchase offer was coming when the company was in the business cycle was in a downturn. It was facing number of constraints at many counts in the domestic as well as on export front. But now when this buyback is coming, it is coming when the business cycle is in the uptrend trajectory. So considering that this buyback offer gives more confidence or indicates about the more confidence of the promoters on their existing business. Now your second question is regarding this acceptance ratio. Obviously, definitely, it would be low, but the existing shareholders who are owning, who are falling in the category of retail shares or having a total share of up to 29 rupees, considering that current price would be the close to the record price, then they can participate in this tender offer because their cost price would be lower than that of the current price, and they can repurchase their shares again, considering the long-term growth prospects of the company.
Okay. Abhishek, hi, good morning. Tamanna here. Looking at the details of the buyback which are finally out and the fact that it's a hefty premium to the current market price, what would be your advice and your specific strategy on Bajaj Auto right now?
See, definitely the record price would come, but as I have said, that is, if we assume that the record price would be close to the current market price of rupees 7,000, then though the retail investors quota would assume to be roughly 15%. And if I assume that the retail shares, the shareholders who are having shares up to 29 shares would be eligible to participate as a retail shareholder. Then whatever be the acceptance ratio, if they are holding stock since long, whatever be the price, you can say if we can take the 1-year price, so above 4,000 rupees or whatever be. So they can participate in this tender offer. They can tender their shares, and post this tender offer, they can also repurchase the shares. So it would have a two kind of, again, one that is a long-term gain strategy will remain, and second that in participating this tender offer, you would have a additional gains with a lower tax ratio.
All right.
Right.
All right, Abhishek, just last point on, we're talking about Bajaj Auto in the context of the buyback, and you've talked about the acceptance rate, etc. in detail. But fundamentally, looking at the numbers coming in versus a TVS, how do you like Bajaj Auto?
See, Bajaj Auto has been as a part of our top pick, and there are multiple reasons for that compared to the last 2 to 3 years, if you can see that company's performance in the domestic market has been improving. It's gaining market share in the 125 plus cc segment. One. Second, that company was considered to be a laggard in the EV segment. But if you see that currently it is enjoying almost 10% kind of a market share in the electric vehicle segment compared to the 3% in FY23. Third is that it is now coming out with this the Harley this Triumph 400cc, which is directly competing with Royal Enfield, and it is giving it a presence in a premium iconic segment, considering that the company has been a market leader in the mass premium segment. But with this Triumph, it is gaining space in the premium iconic space, which is definitely a positive for the company. And the fourth one is that although the export market, it is still facing constraints in the export market, but if you see the volume for last 6-7 months, it is appearing that the export volumes have been largely bottomed out, and it is a matter for time when we will see uptick on that. On top of that, company has been continuously maintaining margin in above 19%. So considering that, we have been positive on Bajaj Auto, and it is a part of our topic in the overall auto space.
Okay, Abhishek, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. So that's Abhishek Gaushende on this thing. So the acceptance ratio would be interesting. Remember, Tata Motors is the other interesting one in focus today. But it's time for editor's cut, and we'll get to that in just moments from now. Keep in mind that this is the end of the trade setup, and the idea was to discuss what's happened with all the key stocks in focus, including autos. I would have loved to talk with Abhishek about Tata Motors as well, but I think we ran out of time there. Okay, I'm told Tushar is waiting by as well. Tushar, very quickly, 30 seconds. You heard Abhishek as well. Anything out there on the acceptance ratio?
Thank you, Niraj. We did some calculations on the acceptance ratio. At 1.41 overall acceptance ratio, the retail participation can be seen at 3.90% and general at 1.27% at the lower end. So according to the SEBI rules, about 15% of the tender offer should be reserved for small shareholders. Now, if you're holding about 100 shares of Bajaj Auto, what will you get? Your 100 shares are now equivalent to 3.9 shares in this particular buyback. So if it's worth 39,000, so at 3.9 shares, you stand to gain about rupees 11,750 rupees if you tender your shares in the buyback. Quickly into Nuvama, what they're saying about the Bajaj Auto buyback. Sentimentally, it's near positive, so the stock will rise today. Acceptance scenario, according to Nuvama, in the base case, the general category should see an acceptance ratio of about 1.3%, with a potential of about 55 to 60 basis points at the current market price of about 7,000 rupees. Remember, Bajaj Auto's buyback is approved at about 30% premium at rupees 10,000 rupees per share. The retail, as per the initial calculations by Nuvama, is seen at about 4% to 10%. If the promoters opt out, which is unlikely, the general acceptance may rise to about 3%, with retail acceptance may be unchanged. Niraj.
Got it, Tushar. Thanks a lot for that. Okay.
Yeah.
Well, that's a very extended trade setup. We are way over time, but so we'll make a quick editor's cut today. And Agam is joining by to talk about what is it that we have, Agam, today. I know I'm joining as well, but what do you want to tell our viewers? What are we talking about today?
Well, we're talking about two very interesting topics. The first one is the question, actually, whether or not India can, in fact, eclipse China in terms of, well, what is in store with respect to the economy and business going forward in 2024. And the second one is on reports which suggest that Sony may be calling off the merger with Z. Remember, we do not have confirmation on that one, but we are certainly going to discuss that one all the same. So we have Niraj and Sajid joining us. Niraj, I'm going to start off.
May I request start with Sajid? May I start with the micro and then go on to the macro, if you don't mind?
Fair enough,
yeah,
fair enough.
Thanks.
Well, I suppose we can certainly start off with Z and Sony. Sajid?
That's right. Agam, it's a report from Bloomberg which suggests that Sony may be calling off the entire deal. To give you a context, December 21st was the date when they were supposed to complete the entire merger.
Yeah.
As per the agreement or shareholders agreement that exists between Sony and Z, there is a grace period of 30 days. Within which they can come back and look at the terms of reference and then decide on an extension date so that the merger can be completed. Now, we should go into the statements made by both Zee and Sony, and that there lies the entire issue. You know, Sony, the Zee statement said that they are entering into good faith negotiations with Sony for an extension, and Sony came back and said they're waiting for the terms of reference.
Right.
Now, the terms of reference here are clearly that, you know, who is going to head the merged entity. There is an issue with respect to Puneet Goenka heading the entity, and Sony has his reservations accordingly, and that seems to be the main contention here going forward. Sony has, both the companies have time as per the agreement till Jan 20th to decide whether they want to do the first extension. And that would be dependent on whether both the principals, in the case of Sony and Zee, agree on the terms of reference, which is who's going to head the merged entity. Now, it seems like that there's a status quo there, and I don't think Sony is willing to budge anyway.
Sajid, just one question, Agam, if you allow me. The same story says that, yes, it might call off, but the talks are still on. So, as of now, it is undecided, right?
Is the date.
Exactly.
30-day grace period ends on Jan 20th. Within that, they have to complete the terms of reference.
Exactly.
Which basically means that they have to put it in layman's term, they need to see what are the conditions that needs to be satisfied, how much time that needs to be given to those conditions to be satisfied, and if there are any issues that needs to be ironed out, so that they can come out with a firm date saying that, okay, we are seeking 6 months or a year time more to complete the merger. Now, the terms of reference has to be agreed by both the parties in this 30-day grace period, and that is what the negotiations is about, and I think both the sides are posturing, and they've been firm on their sides.
On a swap roles.
I'm sorry, without the confirmation from either parties, it is still a bit premature to suggest that the merger, in fact, has been called off in that case.
You know, the more they keep silent, the more the rumors would be there, the more speculation will be there. Of course, Sony is saying that they don't have anything to add at this point in time. Zee hasn't come back on this news report either. So, you know, it's still a speculation. But, you know, as things stand, and we were talking to analysts, while some say that, you know, the merger will go through and Puneet Goenka may step down, the others are saying that, you know, because it's taking so much of time, it seems that the merger is off. So the street is there to judge this.
It'll be interesting. I want to hear what Agam says about the Zee positions call put writing that might be expected today because of this. Agam, quick 30 seconds. I'm swapping roles here.
We have already seen a lot of shorts building into the system over the past 2-3 days. It doesn't necessarily mean that traders had an idea or an advantage there, but we have seen shorts all the same. That could possibly mean just because the markets have also seen shorts, they're adding into shorts in relatively volatile counters. But on the whole, I also was looking at the chart for Zee, and over the past 2 years, it really hasn't moved. And I reckon, of course...
So it went high.
And
it has retraced back to the pre-merger levels.
No, so just quick 10 seconds. Because it's uncertain and close to deadline, who knows? Far strike, pull, puts and calls might see some interesting activity today after this note.
Yes, it certainly will be, because that's
but Jan 20th is the date.
So which is why. It's just 10 days away, so might as well.
Yeah, absolutely.
Anyways, okay, should I go?
Yes, you must.
Okay, just very quickly, you know, these are a summation of a few conversations that we've had, and so many people are talking about. Yesterday, I think you guys pointed out, I was not here, but India's weightage in MSCI EM as well has gone up. Now, could a China EM equity decoupling be the big deal for 2024, and can China thwart that? I mean, this is all in the realms of hypothesis, but humor me, guys. So here's the deal, right? The declining US Treasury yield and the weakening dollar have already spurred capital inflows into emerging markets in 2023. We all know that. India has been a recipient as well since March, well until December, so to say. The point is, foreign investors in that period have continued to pull money out of India. Again, out of China. Again, that is also well documented and well known. But the point is that in a year wherein EM saw some significant inflows, MSCI China underperformed. Massively. Now, does this dent investors' confidence who want to put money into EM? We had an investor in our studios who was saying that there are EM ex-China funds who are getting some very rapid inflows. I don't have data for that, but that was his hypothesis, because the gentleman also is in the throes of maybe launching something like that. Now, what ails China markets? Look at this, guys. The regulatory stance remains unpredictable to even hostile to MSCI China companies as well, right? So that is the first thing. I mean, they signaled repeatedly in 2023 that the tech crackdown was over. Regulators closed out the year with new draft regulations on December 22nd, curbing spending on the online games, right? Now, this was not anticipated when the government is saying that we are coming to the end and you suddenly spur new regulations. So that was part one. The long-standing focus on boosting the supply side is also an issue because there is EU, US, everybody's talking about overcapacity. Just today, this morning on our website, we have a story about how Xi Jinping's plans for becoming a world trade thing is getting reactions from US, EU about Chinese overcapacity and dumping, so on and so forth, and protectionist measures. And sluggish demand has led to an oversupplied economy prone to disinflation. Also, nominal growth, which is what matters to equity investors, right? They don't care about real growth. They care about nominal growth. Nominal growth in China was up just 3.5% last year. And the last data point here, guys, core CPI was down 0.3% in November, which probably indicates a sluggish Q4 as well. So no doubt that growth is not looking all that strong. Now, does this mean that other EMs benefit? Because if 2023 was a trailer of yields and weak dollar, and if that continues in 2024, other EMs would tend to benefit if people continue to shy away from China. And of course, ongoing shift of the global supply chains to other markets, including India, Vietnam, etc. Trinh Nguyen of Natixis mentioned this yesterday. The only flip side, guys, and this is the last point that I'm making here very quickly, is that it's the year of the dragon. Can Chinese stocks deliver? The thing is, valuations are appealing. CSI 300 is at 10 times 1 year forward. And China H shares, which is not the mainland China, but Hong Kong shares, have a very high sensitivity to falling yields. Now, if yields do come off in 2024, can those stocks move higher and can that spur the sentiment? I think that's the big question that could save sentiment on China stocks. So let's wait and watch.
So where is the flow going to come to? Is it going to come to India and other emerging markets minus China, or there is a possibility that it may go back to China?
So valuations would demand that money may go back to China, but just the recency bias may make people believe that let's wait for some stability before we put in money. Because like I said, right, the last point here, guys, that while China said that we are doing away with all crackdowns, December 22nd, they put another crackdown. So who is to believe what's happening there? That's the point.
But just about 1.5 years ago, the Hang Seng Tech Index was a great opportunity to diversify your holdings in NASDAQ. And a year and a half down the line, where NASDAQ is at life high, we're looking at the Hang Seng Tech struggling quite a bit at the moment. So,
So, well, we rest our case. And
on the issue of tech, just to mention, yesterday we were looking at these lending and borrowing, stock lending and borrowing things, and there were people who had gone short on Motilal Oswal's NASDAQ fund.
That's the NASDAQ ETF.
NASDAQ ETF, which we are talking about. So,
Interesting.
Yeah. Well, there you have it, guys. So, two very interesting topics being covered today. Of course, we spoke about China and the kind of advantage that it could potentially lose out when it comes to India, and of course the Sony Z merger, where things are looking a little bit more challenging, at least as far as Z Entertainment is concerned. So we continue to keep an eye on that one, but on that note, we slip into a short break. But on the other side, we talk about futures and options again with me. We'll be right back. Stay tuned in.
Welcome back. You're watching India Market Open. It's expected to be a good start for D Street this morning. But first up, the headlines. Oil plunges 4% after Saudi Arabia announces price cuts for Asia. US equities recover, but bond yields still hover around 4%. And Samsung says its profits will plunge 35%. Bonanza for Bajaj Auto shareholders, company to buy back shares at rupees 10,000 at a hefty premium to yesterday's close. And Adani Group back in the news, expected to invest 42,700 crores in Tamil Nadu across different sectors. Sony plans to call off merger with Zee, according to Bloomberg. No official word yet from either parties. Well, those are the top headlines that we are tracking this morning. In the meantime, Agam is standing by with more on the F&O picture. Agam, yesterday was red across the board. We saw selling pressure coming in, intensifying, markets closing at the day's low, the wicks jumping. But this morning, it's a whole new day.
It's going to be a tough day, Samina, to be very honest, because, you know, with the kind of sell-off that we saw yesterday, a lot of traders were expecting more weakness this morning, and you suddenly see the GIFT Nifty indicating a 100-point up move on the Nifty. That could potentially trigger a short covering, at least earlier on the session. And after that, well, it's anybody's guess, because, you know, the little bit of weakness that is seeped through, that's very evident. So the question really is that where do we go from here? And again, it is going to be a tough day to call on a trend in today's day of trade. The first hour will matter a lot. That said, let's talk about what happened yesterday. So yes, we did see about a 1% decline in the Nifty, and we saw a lot of older positions being unwound, considering the kind of weakness that we saw. A lot of that was on account of weakness in banks that we saw, where the bank Nifty, in fact, saw a decline of 1.5%. And even as we saw a good 25% increase in open interest towards fresh shorts. So yes, volatility is back. That was evident in the VIX, which also rose by as much as 7% in yesterday's day of trade. Let's take a look at the options market then. Let's see where things and how things have panned out. So since we saw the Nifty come off and were closed below 21,600, we saw a lot of unwinding with respect to puts and a little more writing around the 21,600 calls, naturally considering we are currently exactly at the base that is the support of 21,500, at least based on max OI. Speaking of max OI, let's pull out where the distribution currently stands. So on the higher end, the range, or rather the upper end of the range, shifted from 21,800 to 21,700, denoted by max OI in that particular strike of calls. And on the lower end, we have max OI in 21,500, but that open interest has declined substantially, which could mean that there could just be a little bit more weakness in store. However, things can certainly change if we do sustain gains in early morning trade today. So there are a lot of questions as we move into trade today. That said, to make things even more complicated, we also have the Fin Nifty expiry today. So Fin Nifty options, a weekly expiry, will be an interesting one to watch, where we do have a lot of resistance around 21,350, 21,400, and it does make things murky, because a lot of constituents of the Bank Nifty are also a part of the Fin Nifty. So keep an eye on that one. Finally, let's talk about stocks. There was a lot of weakness, and because of that, we did see a lot of shorts building up in Navin Fluorine, Bandhan Bank, Hindustan Copper, Polycab, and even in terms of those stocks which saw unwinding, there was a little more weakness. So longs unwinding in Delta Corp, Godrej Consumers, GNFC, along with Dr. Lal PathLabs. The question really is, where do we take this data to, and what do we do with it? Well, let's get an expert for today. We have Milan, Vaishnav, Gemstone Equity Research joining us on the show. Milan, good morning, and thank you so much for joining in. Well, confusing cues coming in as far as the benchmarks are concerned. How are you playing them, Milan?
The cues are not so confusing as I would call it, and the picture stands pretty much clear on the chart. Now, if I go back to my previous talks that I had while interacting here on this platform, I had mentioned that markets are seeing some negative divergences on the lead indicators, and these may lead to some consolidation or some corrective retracement taking place. Now that has exactly happened, and in fact, it is good for the market, because such kind of consolidation or sideways moves or some corrective retracement, they tend to make the previous up move much sound and healthier. Now, that being said, today we are expected to see a strong start with The GIFT Nifty showing an implied open of 124 points for Nifty. But that being said, I expect that there will be two things happening in the market. Number one, yes, we will see some technical rebounds. But at the same point in time, we will also see markets finding resistance near 21,700, 800 zone. And eventually, 21,500 might be retested again in next 1, 2, or 3 days. I would not like to put the time frame on it. So the moral of the wrong story is that yes, we will see some technical rebounds. Eventually, we will also find some pressure coming in from the higher levels. I'm not forecasting any major downsides here, but at the same point in time, I would also like to imply that we are not seeing any runaway rise in the Nifty, at least over the immediate foreseeable short term. That being said, the markets may remain in a broad trading range, with it finding very stiff resistance at 21,700 and higher. But in any case, we are also expecting that volatility will increase over the coming days.
Right. Well, we may expect volatility to increase in the coming days. But Milan, for now, how are you placing your bets in options when it comes to your benchmarks?
See, I believe that Nifty has got, from the classical standpoint, I'm not saying from the options data, it indicates a deeper support at 21,000. But I expect that Nifty will continue to find resistance at 21,800 and higher levels, and some support at 21,300 levels. So for today, I will be going in for a short strangle by selling 21,950 call and 21,300 call, both of 18th January expiry. We will be collecting a total premium of around 124 rupees. And so long as Nifty stays within this range, one can expect a yield realization of around let's say around 4 to 4.5% over the next couple of days.
Right, Milan, we just wanted to be absolutely clear. So you're saying that you're selling the 21,950 call, and
right.
On the lower end, you're selling the 21,300 put. Am I correct?
Yes, correct.
Okay, great. So there you have it. That's as far as your strategy on the Nifty is concerned. Milan, what do you have in terms of stocks?
All right. See, now we are seeing a gap up. I will not call it a gap up opening because I'll call it a stronger opening for the Nifty, but I would still not like to chase any high beta stocks. So my stand in the markets would remain a bit defensive. From a stock specific point of view, I am eyeing Cipla. I am recommending a bull call spread on Cipla one can buy 1290 call. And sell 1350 call. We expect Cipla to test 1350 levels. So the net premium that one would pay would be 14 rupees. That is 9,230 rupees, and that is the maximum loss that one can suffer in this trade. Max profit potential is around 29,000 plus. Now, I would also recommend maintaining a stop loss of Cipla slipping below 1240. Thereby, you can also limit the maximum loss figure of 9230 here.
Right, a very interesting strategy here as far as Cipla is concerned. You're playing a debit spread and you're playing towards a positive move here, of course. And while Milan has mentioned a max loss and a max profit in terms of the strategy this morning with a 1 rupee risk as against 3 rupees gained, well, he's also suggesting a stop loss with respect to its underlying at around 1240, which could also perhaps limit your loss even further. So watch out for that. Milan, on that note, we'll take a moment to thank you so much for joining us and taking us through your views on the markets, as well as giving us a handful of trading ideas. And with that, it's over to you, Samina.
Thank you, Agam. That, of course, is what the market setup is looking like this morning. It's going to be volatile and it's going to be tough to ride, especially given the kind of selling we saw yesterday and, of course, woken up to very solid global cues this morning. Well, we've also got lots of specific counters that we'll be tracking in today's trade. Harsh is joining us with more details of that. Harsh, a handful of stocks that will be in focus this morning.
Yes, absolutely, Samina. So let me start off first off with GMDC. They've got environmental clearance with regard to their lignite plant in Surka. Now, what this means is the plant will start or has clearance to expand its current 3 MTPA capacity to 5 MTPA. What the company seems to suggest is this will add substantial revenue with regard to the top line, of course. So that's one key positive. Where the revenue trajectory has gone, well, since FY20 as well as 21, revenue has actually doubled. Revenue stands roughly at 3,500 crore, even trailing 12 months around 3,000 crore of revenue. So on top of that, we can expect some amount of growth as has been suggested by the company. Roughly 8% revenue CAGR is what the company has clocked in the last 10 years. So that's something that will give a bit of a fillip to the stock maybe early today. Quickly moving on, Oro Pharma also in focus, US FDA action with regard to its Telangana facility. Now, what the US FDA has done is they've given voluntary action indicated as the classification post the inspection. And what this means is that certain objectionable practices have been found, but the agency is not prepared to take any regulatory action, and therefore, ideally, there is no impact currently, which is, of course, a positive. Quickly moving on to Cipla. Well, the company's UK arm has announced a JV with Chemwell Biopharma as well as Manipal Education and Medical Group. The JV is to develop novel cell therapy products for major unmet medical needs in the US, Japan and EU regions. Cipla will own roughly 35% of the JV and will provide product development. Chemwell will use expertise on the biologics front, and Manipal will undertake healthcare delivery. So each of them providing what they're good at. Last off in focus is Fino. Well, the payment bank has applied for a small finance bank license. Currently, the payment bank is only allowed to garner deposits of 2 lakh rupees or up to 2 lakh rupees. Now, that cap will go away if it does get the small finance bank license. The other piece, of course, is that there are certain limits with regard to borrowing which small finance banks have to undertake. Payment banks not allowed to borrow at all. So that will be the other key positive, even though Fino has suggested that they will not get into the lending business. They will only continue to be lending enablers. So Fino in focus, of course, there ought to be a positive reaction on that one as well.
Yeah, all right. Thank you. Thank you for that, Harsh. A lot of counters in focus today, but the big story is really where the markets will go. Now, here's the interesting sort of setup that we're seeing for the day. You saw the Nifty close nearly 200 points yesterday, but your implied open, and let's pull up that implied open once again, looks like you're going to have a significant gap up. What do you do in a market like this, especially if you were, taking a short position? Kush Bohra, founder kushbohra.com, is with us on the show. We're also speaking with Feroze, Azeez this morning, Deputy CEO Anand, Rathi. Welcome to both of you. Great to have you on NDTV Profit. Kush, let me begin with your take on the levels, Nifty and Bank Nifty.
Hi, Tamanna. First of all, very good morning to you and to all the viewers. Well, this is like a one step forward and two steps back kind of a market, isn't it? I mean, that's how the Jan month has panned up so far. Now, the kind of move that we've seen yesterday, one thing's very clear, and also the kind of gap up that is expected today. One thing's very clear: don't chase this gap up. If the opening is close to 21,600, 21,700 zones, call writing suggests that we're already opening near the resistance zones. So perhaps a buy on dips might be a better strategy, but don't chase this gap up. Also, the 20 DMA for Nifty, which is 21,450, close to that level. It's a very crucial level. If the Nifty slips below that, then we could be in a bit of a further slide to 21,200 kind of levels. So take each day as it comes. So broadly speaking, 21,400 is the support zone and 21,700 is the resistance zone on Nifty. As far as Bank Nifty goes, well, we've closed below the 20-day moving average, and now the only meaningful support comes near the 47,000 mark. Only suggestion: don't venture a long trade because the Bank Nifty has fallen so much and there's an underperformance. Hold up. I think let the falls settle closer to 47,000. We might get an opportunity to buy again. But up until then, I think we should just hold up on any kind of long trades. So 47,000, 47,100 are the support zones. 47,900 will now act as a resistance zone. The only silver lining that I see here is that, Jan is acting in line with what was expected, even before the month started. And this is setting up to be an extremely rewarding Feb in March. So as Warren Buffett said, rule number 1 is protect your capital. And rule number 2 is, never forget rule number 1. So just hold up, protect your capital. We're setting up for a very fabulous Feb in March.
Just a quick word on the Nifty IT. If you're saying one step forward, two steps back, Kush, nothing describes that better than the gyrations that we've been seeing in the Nifty IT. About 1% down. What's your take for today, considering that you've seen a tech revival of sorts in the US markets on the NASDAQ yesterday?
So I think we'll see some kind of a rebound. If I just talk about the index per se, the index has been under the 20-day moving average for last 4 sessions now, and that's turned out to be a tricky level, which is 34,900 odd to take out. So I think there could be a rebound from here. But I won't run too ahead of myself here, because we know the results are around the corner. Even if there is any kind of meaningful bounce on the tech IT on the IT index, take some money home, wait for the results to come out, and then perhaps we'll see the kind of results that come out. We'll see the direction that we need to take. For me, for now, any kind of bounce above the 20-day moving average will be a profit booking opportunity.
Right. Feroze, very good morning. Great to speak with you on NDTV Profit. It's looking like a morning of conflicting cues, looking like a good day for today. But how would you set up the trade for a day like this?
Tamanna, good morning. I think, like you said, there has been some degree of range-bound activity on Nifty over the last few days. I personally think more from a 1-2 month standpoint or even long-term standpoint, there is inflows. Like yesterday, if you look at the AMFI data, there is about 16,997 crores of net flows in equity. Largely, there is 6,000 crores out of that going into sectoral indices and about 3,800 crores going into small cap. As long as there's going to be buying pressures on the fund managers and the other institutions on the FII side, you are going to see resistance on the downside. Of course, derivative has a large implication on the short-term moves of the cash market. But if you look at the derivative side, the FII long position is about 68-69% as of yesterday. On the index futures, that I would see as a great lead indicator. Whenever it's crossed about 80% on the one side, there is pressure on the other side. So I think we have still got some headroom in terms of long build up on the FII side and the index long positions. That's point 2. Point 3, if you look at any other derivative indicator, the best, to my mind, the best derivative indicator is the synthetic premiums on the synthetics, weekly synthetics. That in December ranged between 60-70 rupees. The intrinsic value of a synthetic future on a weekly basis, on a weekly expiry, should be about 18 to 20 rupees. If that goes to 60-70 rupees, that actually is the consolidated bullish opinion of all the traders operating the market. That has cooled off. So that's showing an opposite sign of it. It closed at about 21. The futures, synthetic futures premium over the next Thursday, which is the 18th expiry. So that has cooled off, saying that there is not going to be a huge rally. But I think there is going to be a huge support with the kind of liquidity we have seen from FIIs, which is greater than almost about 62,000 crores last month. I think that FII trend will continue in January as well.
Feroze, hi, it's Samina as well joining in. Feroze, I just want to extend the conversation from today into a little more 3 to 6 or 6 to 9 month kind of timeline. Indian markets have returned or done positive returns for the last 8 years. We are coming out of a very solid 2023. I would imagine either it's time for a time correction or a price correction. Price correction may or may not happen, but do you think a prolonged period of time correction cannot be ruled out at this stage?
So, I would doubt that. Good morning. It's so nice to speak to you again. But having said which, if you look at consecutive years of profits on the capital markets in terms of price, you have to also look at the denominator of the PE ratio, which is earnings. Earnings have gone up from 532 to 777 to 819 to 945 this year. We were expecting, I think it'll close at 965. Next year, we're looking at 1100. If you look at earnings also for 5 consecutive years have gone up more than it's going to be hopefully double in about 5 years. So I think there's no reason why there should be a long drawn process of time correction. Like you said, 6 to 9 months is not too long time from an investor standpoint, but we are sitting on a critical event. And I think that event is going to dictate FII behavior for this calendar year. because if you analyze the behavior of FIIs on each general election, irrespective of the government, they have been very excited for status quo maintenance. If this government was to continue, the kind of money is on the sidelines which is waiting, I wouldn't be surprised if that's $20 billion to be invested in this year alone after the general election results, if status quo of governance is maintained. So I personally think this is not going to be a very usual year. I don't think it's going to be a lackluster year of sideways movement. It is going to be a R-par kind of a year. And I think largely R, in terms of par, as you say, it will do well. More probability, almost about 95-97% probability for it to do beautifully well, because I think sideways movement is unlikely for this calendar year.
Feroze, it's so exciting to hear such an optimistic take on Indian markets. I think the sentiment is being felt worldwide. I caught up with HSBC yesterday and they seem to be very overweight India, at least in the emerging market pack. Kush, we'll come back to you after this break for your stock picks. We'll slip in a break, but stay with us. We're gearing up for market opening this morning. Welcome back. You're watching India Market Open. It's expected to be a positive start. We're tracking global cues, which have actually been pretty solid this morning. Kush, a couple of minutes to go as we gear up for pre-open trade. What are your top trading picks?
Couple of them, and both of them on the buy side. Both of them incidentally have given a falling trendline breakout. First one is Bajaj Finance. A series of underperforming months for this stock, but the last couple of sessions have been a fantastic breakout on the back of very good volumes. So 7,900 and 8,050 are the next levels. On the upside that one can watch out for. 7,650 is a good support zone and should act as a stop loss. Another stock from the railway universe is JWL, Jupiter Wagons. Very similar story. This stock had a very long consolidation of good 3 to 4 months. Last couple of sessions, again a volume-backed breakout, and as I said, a falling trendline breakout as well on this one. From a near-term perspective, 365 and 380 are the targets. 340 is where I would place my stop loss. But positionally, I think this stock is ripe for a 400 plus kind of move as well.
All right. Let's go across now and talk to Tushar. We are focusing on the auto pack today. And of course, while Bajaj is definitely in focus, we also want to talk about Maruti. But before that, quick look at the pre-open rates. Because remember, we are looking at possible gap up. This is just the very, very initial rates coming in and no clear trend, but we'll give it a couple of minutes to settle. The sense is that you are going to see a pullback after yesterday's sell-off in the last half hour to an hour actually of trade. And you're already seeing that trend line go upward. So an eye on the pre-open rates there. But meanwhile, let me quickly go across to Tushar, who's been tracking the auto space closely, and Maruti on the radar right now. An interesting MK note on Maruti. Tushar, what are the highlights?
Good morning, Tamanna. So MK has put out a report on Maruti Suzuki highlighting 3 troubles that Maruti is inflicted by in the run-up to the Q3 earnings that will be due sometime later this month. So what it believes is the 3 troubles are high inventory, a sharp decline in order book, and near normalized production. So When you have a sharp decline of the order book and there is normalized production, which effectively means there's high inventory, also remember that Maruti Suzuki's small car sales have not been that good. The second point that MK points out for Maruti Suzuki is the SUV upcycle is now a thing of the past. So you might remember Maruti launched 4 SUVs in the last 1 year. That is the Jimny, the Fronx, the Grand Vitara, as well as the new Brezza. So while 3 of them have performed really well, there are no new upcoming launches from Maruti Suzuki till it launches its first electric car sometime in October this year. So till that, and what we have seen so far in the Indian auto space is that new launches is what is driving sales for most of the Indian auto companies. So, but there are certain upsides also that MK sees, a revival in small car sales, as like what we are seeing in the entry-level two-wheeler space that we are seeing right now, and the first EV launch that happens in October, as I previously mentioned. Now, what does this mean for the third quarter results of Maruti Suzuki? MK believes there's a lack of operating leverage because of declining volumes quarter on quarter. The deterioration in the SUV mix. So MK believes that Maruti's contribution from SUVs for Maruti's sales will decline a little, from 33% in Q2 to 31% in Q3. There are also higher discounts in October, December. Remember, this is the final quarter of the calendar year, so there are more discounts to get rid of the inventory that may have piled up for the year 2023 before the new production cycle of 2024 kicks in. So more discounts are likely, which is about 10% odd for across the range that we are seeing right now. There's a rapid rundown in the order book. So what in the first quarter of the year, that is in 2023, January to March, the order book was 412,000 units. That reduced to, in the July-September period, that reduced to 288,000 units. So there's a sharp reduction in the order book. Essentially, all these elements combined may see companies' profitability decline about 90 basis points to about 12% in Q3. Tamanna.
All right. Thank you for that, Tushar. So Maruti in focus, definitely, but this morning, I would say if you're looking at an auto counter, it's all going to be all about Bajaj Auto. Let me go across to Kush and Feroze if they have any take. And Feroze, let me come to you first. 2 buybacks, actually, which could respond today, Chambal and Bajaj Auto. First, your take on Bajaj and the Auto Pack.
I would not be qualified to comment on specific stocks, so I would give this a pass, if that's okay.
All right, Kush.
Well, both setups are actually quite interesting. Bajaj Auto has been in, like a uptrend of sorts for a while now, and there is no stopping. In fact, this news will only push the stock higher from the near-term perspective. I won't be surprised to see 8,000 plus kind of levels. You're already seeing, a gap up opening today, but 8,000 plus kind of levels, very easily, achievable on this. But then I think, it'll be time for, investors to book profit and probably, go light on the stock because it's already gone into overheating territory, and the kind of push that we're seeing today will, take it further in the overheating territories. Simple fertilizers, on the other hand, a slightly different story. The stocks actually started moving after 3 to 4 months of consolidation, and now we've seen a kind of breakout on the stock. I think this move can continue. 400, 20, 25 kind of zones are where the stock could head to. Very comfortably placed on the momentum indicators. Volumes have picked up, so I think this is a much better buy if someone wants to initiate a fresh long position. Just as a disclosure, I have personal holdings in Chambal Fertilizers.
Interesting. Okay, so that's the technical view on both of these. Now I just want to mark a couple of stocks. Z is starting off, or looks like it will start off, with a bit of a gap down. I think the rates currently indicate a 10% downtick. Doesn't look like in the next 3 minutes this will change. Now remember, this is also on account of, this is mainly on account of the news story that came in yesterday, but the story itself mentioned that the talks are still on, they're not slipped, but I think the market would probably believe that the chances of this happening are lower. I just want to see if the other media stocks which are very active yesterday, from a TV Today to a Network 18 and all of those, and how are they doing in the pre-open session? Not as big moves. Maybe some of the moves have already happened, but they look like starting off okay. Now, Feroze, I know you can't talk about specific stocks, appreciate that, but just wondering, what would you do with an event risk like this, wherein the deadline is close to getting over in about 11 days, and there is a large global publication which is saying that they hear that a deal like this might be called off What would you typically do in things like these?
Good morning, Niraj bhai. What I would do is I would try and see what kind of institutional holding is there. What has been the institutional behavior in the stock over the last 5-7 trading sessions? Because that's the smarter money. So if I'm a retail investor or even an HNI investor in a stock which is event based, I'm going to try and gauge the probability of that event. Because when things happen otherwise than the probability is when people make a lot of money. If you have to make a lot of money, you cannot place yourself to only higher probability and make money, because if results come out, the stock has already run, for example. So if there is a low probability event of 15-20% transpiring to actually becoming reality, that's when you make those double-digit returns in even 10 days or even 2-3 trading sessions. So point one I would do is I would look at the volume. What is the kind of volume change which is happening? Because the correlation between market, if the stock has been lower over the last few sessions on higher volumes, it's quite likely that institutions are doing. So one is institutional behavior. Now, one is volumes. One is the kind of premiums and discounts. If it's a derivative stock, I would look at the premiums and discounts because a person with a deeper pockets expresses his opinion not by borrowing and selling the stock. He goes shorts the stock. If the premium and the discount on the stock is very different than the 3-month average, that implies what is the smart money thinking. You can't do the kind of research. You can't do the kind of sell-side research. There are several analysts on the street who give advice for free to an institution in spite of not getting paid a salary for it. So if there's institutional brokers giving them free research, I think you will have to try and decipher what's that free research saying. And that comes in the premium and the discount. So these are the 3 things which you would look out to assess the actual probability of an event happening or not happening.
Got it. Well, thanks, Feroze bhai, for that. And, we'll avoid telling Kush for a view on Z simply because it's an event-based drive. So the call that he gives today might actually fall flat tomorrow as well, if indeed the story reverses, Samina. But interesting moves, media at large and Z in particular today.
Kush, you want to just come in on 2 stocks, TCS and Infosys. Would you initiate any trades over here ahead of Thursday's earnings?
Samina, despite Niraj not throwing the Z question at me, I would still go ahead and take it.
Please.
I'll tell you why.
It's the talk this morning. It's all the buzz this morning.
No. I'll tell you why. I have a very clear answer, and that's been my answer for Z for any kind of question for the last 3 to 4 months. Is that there's one certainty in the market which is avoid Z. And I think, once again, I have been sort of proven right, because there is far too much happening. Why would I want to enter a stock with, so many, news flows, both positive and negative, and I have so many clean plays, right? So my answer to Z is very clear. It's an avoid. So yeah, as I said, despite not asking, that's just something that, from my side, and I'd want to add. So Z is an avoid very clearly from my side. See, as far as TCS goes, again, the stock's been under pressure. For me, the comfort is in the fact that it's come closer to the support zones of 3,600, 3,650. So from here on, it's not a bad idea to buy, but I will maintain the same view, which I did when Tamanna asked me about the Nifty IT, which is with the results around the corner, you might just want to hold on any big, hold off any big purchases. Let the results come out, let the story play out, and then we'll perhaps look for a fresh trade. From an investor perspective, it's not a bad idea. This is a good level to start accumulating TCS. Again, now as far as Infosys goes, a similar story. It's slightly better placed than TCS. TCS is in a bit of a consolidation mode. I'm sorry, with a negative bias. Here the bias has turned positive. So if someone wants to trade, Infosys is a better setup than TCS.
Guys, sorry, but I have to come in on this. Let's pull up the prices. And Kush, sorry, I was just trying to avoid the future blushes for you in case you go wrong on something like this. But yeah, well spoken. Don't play events per se, because you don't know when events happen. But the point that I wanted to make today, guys, just pull up the stock price of Praveg, pull up the stock price of Apollo Sinduri. That's the other one that was up 20% yesterday on this whole Ayodhya thing. And I know Tamanna is itching to come in. So, but Praveg up another 13%, right? 13.19. Is Apollo Sinduri also up? Just want to see what's happening there, because that stock was up 20% yesterday. Apollo Sinduri up another 4.5%, 5%. Guys, this is, I can understand optimism, but the stocks have rallied. After this 13% up move, Praveg is up 50% in less than a month. Apollo Sinduri hasn't had such a gain. It is up 20% in the last 1 month, but it was up 20% yesterday on one hotel in Ayodhya.
Even IRCTC, that's also hit record highs yesterday. I don't know what it's doing today, but again, it's the Ayodhya euphoria.
Yesterday was the Lakshadweep story. Praveg, yesterday was the Lakshadweep story.
Also the Ayodhya story, Tamanna, because there are stories which are saying...
That is ongoing.
Ongoing.
But yesterday was about Lakshadweep. The reason I'm saying that is because...
PM Modi's...
No, in August last year, Praveg has got an order for building your makeshift tents and changing sort of areas because scuba diving is big there. And then, of course, you had Prime Minister Modi and Maldives and that backlash. In fact, I'm going to be speaking with Ease My Trip today because they have suspended all packages to Maldives. So how many are actually coming into Lakshadweep then is the question. It's easy to tweet, but to actually book is the question.
Yeah, but hence the numbers. Sorry, and just before we get to Feroze, so on Praveg, they operate apparently a tent city outside Ayodhya.
Yes.
And I was reading a report from on one of the websites which said that rooms in that tent city have been booked for multiple days beyond Jan 22nd at some obnoxious rates of some 25-30,000. So I think that is where the frenzy is also coming in. So I take on board completely Lakshadweep, but Ayodhya is a big point.
3 to 5 lakh visitors are expected every month in Ayodhya for the next 6 months after the temple reopening.
Yeah, quite crazy.
So that whole dynamics of domestic tourism, broadly speaking, is definitely one to watch out for.
Feroze, just coming by, and what do you think about something like this, a frenzy like this in small cap names, which might be fundamentally benefiting, but is it in the price for some of these?
I mean, how we look at it is, we look at it as an absolute gain seen as a percentage. See, if there's a market cap of a company which is 50,000 crores, and if a specific event were to happen, the event can also give you an absolute gain and shift in PAT. That might not be a large percentage on a base of 50,000 crores. If the company is 2,000 crores market cap, and if there's an event which happens which gives them a potential valuation change of 1,000 crores, that as a percentage of their 2,000 crore base is 50%. But if the same 1,000 crores benefit in terms of market cap coming to a 50,000 crore company is no more 50%, but it's just 2%. So some certain events are absolute gains when measured as percentages on a smaller base on the market cap of a company can show up a very large value. That's what happens with small caps and these events. See, an event like that for a large cap company might be a very small percentage of market cap movement because some events are absolute change in market value. Because of this kind of an event. So that's one thing which I really look at. Second, I think the kind of free floats which these small caps have in terms of rupee value. See, the free float might be 10% of a small cap company, for example. I'm just hypothetically saying. But the value of that 10% could be as little as 400 crores. If somebody wants to gobble up 200 crores out of that, the kind of price movement you will do on that, because the rupee value of the free float is also an important lead variable in terms of every rupee of infusion in that stock changes the price by how much? How much change in price per unit of rupee becomes higher as you have smaller rupee values of free float. So these are the two variables we see which have proved to be a little better predictors.
Interesting. Well, let's see if we can use some of those. By the way, some clarifications on your screen from Bandhan Bank. There was also an update from JSW Steel. And remember, metal stocks might be in focus today because China has said that they will probably give some more stimulus. So that might be in focus. Bandhan is up 3% on that clarification in the pre-open session. Let's see if there is more in store. We'll take Kush Bohra's stop call maybe after the markets open because here's the market opening this Tuesday morning. Well, about 137 points, exactly in line with what the implied open was indicating. 0.5% up for the Sensex. Bring up the Nifty bank. Okay, recouping a little bit from that 47,500 mark. And the mid-cap and the small-cap indices will come up on your screen. 0.8%, 17,491. Small-cap index, 0.8% again. The market breadth must be terrific. Bring up the heat map and let's see what's moving and what's not. I want to focus on the large cap and look at Bajaj Auto up 4.5%, so strong gains there. IT is looking okay. Wipro, Infi, LTI, Tech Mahindra, some very strong moves there on the IT names this morning ahead of the results. There is some strong build-up. Tech Mahindra too is up. So all the top 5 IT names in the top 10 gainers list. Then there is a Adani Port and Adani Enterprises and an ONGC. Well, I wish Z was still in the index because we have marked Z here. But clearly, sorry, just before I hand it over to Tamanna, can we pull up Z on the stock here? I'm sure Tamanna will mark it again. But let's just see what the stock price is looking like. 8.5% lower for Z, 9% now. Clearly the Bloomberg story having an impact, Tamanna.
Yeah, absolutely. And Z definitely one on the radar. But what a day that we are seeing across the board. Just a few stocks that are on radar, and you're going to see a broader sort of list of stocks responding positively today with a massive pullback. But Delta and Nazara, let me talk about those since they have news flow coming in. Not much response so far. Z, Niraj has already pulled up, but I'll revisit because that is definitely going to see some pain coming in. Now, you've had a lot of, analysts saying that perhaps the deal will not be called off. And while we're saying Sony to call off merger, the fact is that this is just a report. There is no official word that Sony will call off a merger yet. Having said that, there have been no quick denials. We'll have to wait and watch and see what happens in the next 10 days. The question is whether the merger goes through with Puneet Goenka on the helm of affairs. Fino Payments Bank, let's pull that up. They've applied for a small finance bank license. Yeah, good reaction over there, about 5% up. I want to take a look at ONGC and the oil pack overall because crude prices have come off quite significantly. All your OMCs are doing well this morning from HPCL and BPCL. ONGC just up about 1%. But even with negative news, you're not going to see too much of a knock today in a market except for certain spots. CESC, another one we can pull up. Their unit has been selected as a successful bidder for setting up of a green hydrogen facility. That stock up. BEML, another defense order is what they've got. Not a massive one, but the stock up about 2%. LIC is another one that I would pull up. They're going to invest 10% in an NHB unit which deals in mortgage, in residential mortgage-backed securities, and Nykaa. Perhaps the last one over there, an HSBC note after their business updates yesterday, which has maintained a buy rating and see a 250 rupee target price for the stock. But I'm sure, Samina, this morning there are a lot of big pops that you're seeing.
I'm just going to extend the crude story further. So this crude proxy that's being played out in today's day of trade. So fertilizers, tire companies and paint companies are all trading deeply in the green. You've got, I'm just going to take you through a list of those that are actually looking good. So GSFC, which is Gujarat State Fertilizer, is seeing a big bump up. There's also some news flow on that counter, but crude also playing out well for GSFC. Take a look at FACT, take a look at the other fertilizer names. All of them are trading with a positive bias. You've also got tire companies, so stocks like Apollo Tires are looking pretty well placed in early hours of trade. You've also got, of course, Tamanna has indicated OMCs, upstream, downstream, that whole pack is looking pretty good. But what, in terms of stock-specific trade, and I don't really know what's happening in these counters, but definitely worth a mention is Alok Industries. Alok is up again in 8%. 70% gains in the last 6 days, adding another 9% on very large volumes is what we're seeing on Alok Industries. Trident as well, there was a big block deal that took place on the counter yesterday. The stock went home with gains of about 5 to 6%. Even on the day when the markets were actually quite weak, the counter is adding another 8% at the day's high point on Trident is what we have. Lemon Tree is looking good. Your mid-cap IT is also seeing some buying ahead of earnings. Infi, TCS, of course, Niraj and Tamanna have indicated, but the likes of a Coforge are trading firm with a very, very clear positive bias in trade right now. Well, that's what we have on the buy side. On the sell side, All Cargo Logistics, after the restructuring deal took place, the counter ran up very sharply up until then. Post the cutoff date of 2nd of Jan, the counter has been on the sell side, continues to decline about 7% right now. Z is taking the cake in terms of losses. You've got Colgate that's down 2%. All this is looking slightly negative, flat to slightly lower. Shoppers Stop, V-Mart, Metropolis Healthcare on back of those slightly weaker than expected business update numbers is taking a slight cut in trade this morning. But all in all, the breadth looks good. The markets are trading very, very clearly with a positive bias. The Nifty itself is respecting levels that we saw. 21,650 is what we had. 21,500, remember, was respected by bulls in trade yesterday. Today, of course, about 120, 30 points higher from those levels. Do you want to come on this one, Feroze? Consumption, that was one space that took a backseat yesterday because rural consumption still seems to be a weak spot for some of these FMCG companies. Ahead of the earnings season, what are you expecting? What sort of expectations, rather, are you pricing in at this stage?
So, this quarter might not be that great. But I think the long-term trend, or at least the calendar year trend for a sector like that is beautiful. The kind of government spending we are going to be seeing in the subsequent 5 months of the data, which is supposed to be expected, because we have only penetrated 43% as of 7 months in terms of our fiscal deficit target. Generally, the average for the last 20 years has been 73% penetration into fiscal, 73.3% penetration for the first 7 months. So there's a lot of money, government spending, which is expected. So government spending is a lead indicator to rural spending. So I personally think infrastructure spending gives you the largest multiplier in terms of rural demand. So I personally think that will show up beautifully, if not in this quarter. Of course, unlikely that it will show up in this quarter, but I think the subsequent 3 quarters are going to be getting that little fillip from this spending, and I think it's a structural change in terms of rural spending, which you will see in the next 1, 2, 3 years. So I'm very bullish on the sector, consumer staples largely. And I'm not so bullish on this quarter result, but I think there is going to be, this story is playing out in Insti's mind already. So I would not be surprised even on a subdued result if the stock's price start moving up, because there are a lot of institutional counters, institutional desks which are buying these counters already in the hope of the rural spending uptake.
Okay. That's one view coming in on consumption. Kush, your opening thoughts, anything that stood out for you in the first 7 minutes of trade on the index or on specific pockets?
Well, index, the view is still the same as it was, before the market opening. The GIFT Nifty was suggesting a gap up opening close to the resistance levels of 2160, 21650 rather, and 21700. So I don't think I'll be buying fresh at the moment. Even if the Nifty, bumps up another 50 points from here, the risk reward ratio is not in my favor. So I will avoid buying indices just yet. Perhaps on dips, closer to 550 levels. That's when the Nifty buy signal will perhaps emerge. Nifty Bank for now, for me, is a very clear avoid. Despite the kind of up move today, it's still under the 20-day moving average. So for me, a Bank Nifty is an avoid. Now, as far as stock-specific action goes, it's very heartening to see, there's a lot of green on my screen, and a couple of names that stand out. Cements, again, after a couple of days of pause, is back to its old ways. From here on, I think 4200 is a good target to have, from a near-term perspective. And from the railway pack, Railtel, very similar structure to Cements. After a couple of days of pause, the stock has also started moving up. So I wouldn't rule out a move until up until 370, 375 kind of levels. So these are a couple of names that stand out. But I mean, it's heartening to see a lot of green on the screen this morning.
Very quickly, Kush, if anybody was brave enough yesterday to go long on Nifty or Bank Nifty in the last few minutes of trade, would you recommend they take their profits off the table right now?
Oh, absolutely. Absolutely. Because, and I'll tell you a reason for that. I remember, this morning, Niraj mentioned that, 21600 has a very strong call addition. In fact, the highest call addition was at 2600. We're seeing a bit of an unwinding because the Nifty is sustaining after, the gap up opening, above the 21600 mark. But 21,700 for the last couple of days has had that highest open interest pace, and it's continuing to build onto that. So we're anyway close to the resistance. The upside will not be too much. So one option is very clearly to take some money off the table if someone's gone long, or rather, as you said, brave enough to venture a long position in the last minutes of trade. Alternatively, how I want to play, or how I rather I play the momentum trades, is to have a trailing stop loss. So, if you want to ride this momentum in the hope that 21,700 could be breached, even if for a brief while, then have a trailing stop loss. Either way, no fresh long positions, and any positions that you're carrying on the long side, now is perhaps a good time to take some money home.
All right, just a couple of counters I want to take a look at, because there was a slew of news yesterday on MOU signed with the Tamil Nadu government. Adani Group among them, 42,000 crores plus worth of deals signed. And let's take a look at how those counters are doing. Ashok Leyland, about 1,200 crores worth of orders. Brigade is up this morning. It had about 3,400 crore worth of orders, and Kaplan up about 700 crores of orders. Look at Brigade up about 5%. But, I want to get a view from Feroze on this, because you see in the last few days especially, a lot of counters running up on deal news. Sometimes it's MOUs, which frankly is an intent, or, not really a fixed deal inked yet. What do you make of the responses you see to this, or are we just seeing reasons to put in money in a buoyant market?
Yes, I think the latter is so true, Tamanna. People are looking for opportunities, and there's lack of opportunities. You see about, as of yesterday, I think there are 37 companies in NSE 500 greater than 100 PE, almost 180 of them greater than 50 PE. So there is going to be a dearth of ideas where you have hope to make double-digit or even 15-20% compounded return. So I think anytime you see some ray of hope in terms of some trajectory change in terms of PAT, that gets lapped up. Second, as you rightly said, there's a lot of money which is chasing it, and I think I am not too worried about the broader about the full market till the mid caps and small caps outperform the large caps. So this is also a great lead indicator during reversals, especially on the lower side. If the markets are going one way, which they have over the last couple of months, from October 26, which was the expiry 18,850 to almost about 2,000 points now. What I would be very worried is because there is some degree of sharp movements. If there are backward movements, then there could also be 1,000-point movement downwards. So what happens is, before that begins in a very, very sharp way, small caps and the broader market start underperforming. What you see today is also mid cap and small cap outperforming by about 30 bips. The large cap counterparts. As long as that is happening, a big reversal in Nifty doesn't exist. So for a trader, I'm sure he's looking at every 30, 40, 50 points of Nifty. For an investor, he does not want to give away 2-3% or even 5%. So I think that's a good lead indicator. If you look at the correlations of the past, or almost about 18 years I tested, the correlations are very, 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 very significant hypothetically. If you run a hypothesis, the p-values are very, very strong. So I would look at that as the lead indicator to any major reversals in the market, because it proves more often correct than not.
Absolutely. Kush, I just want to quickly come to you on some real buzzers this morning, and we've pointed out Trident is doing exceedingly well. I want to talk about Brigade as well. Do you track any of these? And what would be your view?
Both of them incidentally, and also for the fact that they've recently seen this kind of sharp surge. So Trident for me now is a very clear buy on dips or a book profit kind of a move already way high into the overheating territories. So once again, trailing stop losses would be a good way to play this. 50 is where I would place my trailing stop loss. If I'm holding this from lower levels, it's a fairly decent profit to be making at the moment. So I'll place my trailing stop loss at 50 and hold on to this one. Fresh entry I would avoid. I wouldn't even want to give the buy on dips kind of levels just yet. I want to see if the profit booking sets in and till where does the stock slip. So Trident, avoid fresh positions and hold with a trailing stop loss of 50. Brigade Enterprises is a slightly different story. We've seen the stock run up. It's got on a little late, to the entire real estate pack up move. But it's got on rather well off late. So I would suggest hold on to this one. Even here, 1,000 will act as a psychological resistance more than a technical one, but still a resistance nonetheless. So I think here also it's not a bad idea to hold with a trailing stop loss of about 975. If that gets triggered, wait for the stock to slide, perhaps close to somewhere 900 levels before you re-enter.
Very quickly, Kush, we're short of time, but do you try GMDC? The stock is up 11%. As we speak at the day's high point, and volumes are also looking pretty good on this one. 11%, yeah, on GMDC.
I do track this stock, and my suggestion on this one is this one's a keeper. Hold on to this for a while. This could see moves up until 550, 575 levels also. Trader, I would suggest take some money home because of the recent up move. But if money is really not an immediate need, hold on to this one. This stock could see further upsides of 10 to 15% or more from here on as well.
Thank you, Feroze. Great having both of you today to share your views on the markets. We're going into earnings season a day or two. And, of course, the sentiment today seems pretty buoyant, especially after the kind of weakness we saw on the street yesterday. Well, we've got a couple of important conversations lined up. But in the interim, Bandhan Bank is in focus. I believe it's under stress after the bank clarified that it has applied for the second tranche of CGFUM claim amounting to about 1,290 rupees, 1,290 crore rupees. Here's Harsh joining us with more on that. Harsh, it's over to you.
Well, yes. So Bandhan Bank, this 1,290 crore claim largely has been in the works, but it's been a bit of an overhang for the stock. Now, well, the bank has issued a statement saying it's confident now to get recovery of this 1,290 crore claim that it has made with the Credit Guarantee Fund for micro units. Now, whether this actually translates or not is something that we have to wait and watch out for. But what we know as of now, basis the disclosure, is that they have applied for a 1,290 crore claim. The audit for this claim is in the works. The sample audit has already been done. Bank has issued clarifications which were required. And now the full audit for only this component of the book, which is 1,290 crore worth of the book, with regard to the processes of how the loans were given, etc., is being undertaken. As and when that gets completed, the bank seems confident of a recovery of the 1,290 crore. Now, roughly 40,000 odd crore of market cap for the bank. So, therefore, this 1,290 crore is decently substantial. And you can see the reaction on the stock. The stock is up 2% on the back of that.
All right, thank you for that, Harsh. So Bandhan seeing a recovery after getting beaten down a fair bit yesterday. Not as much of a recovery, but yes, some mitigation to that negative news flow. We're taking a very short break, but on the other side, it's time for some interesting conversations. We're going to be discussing two spaces. First, we'll be talking about Narayana Health's foray into health insurance and speaking with Viren Shetty, the Executive Vice Chairman. We're also going to be talking about the auto sector ahead in the show. Stay tuned. Welcome back. You're watching India Market Open. Now, we're talking about Narayana Hrudayalaya this morning that has received a license from the IRDA to venture into the healthcare insurance space. Now, this is one of the largest hospital chains, at least listed hospital chains. And the conversation we're going to have today is the rationale behind this move. Is it a complementary business? Does it make sense? Or is there more to this strategy? Viren Shetty is joining us now, Executive Vice Chairman, Narayana Health. Viren, very good morning. Great to speak with you on NDTV Profit. Let's begin by understanding why you want to venture into the health insurance space.
Well, why not? The thing that most patients complain about is the cost of a surgery. And we spent the last 20 years doing everything we can to bring in efficiencies and reduce the cost. But at the end of the day, you take something that costs 10 lakh rupees, you make it 2 lakh rupees, you make it 200 rupees. It's not something anyone's happy to pay, because health expenses are always unexpected and you never feel happy about paying it. But insurance is an expense that everyone is willing to pay monthly. And so this is the only way we feel that we can reduce the cost for our customers, by offering it in such a way that you're just paying small amounts every month and we take care of everything else.
It's a tough space to be in. There are 5 standalone insurance